All right, pre-market traders, welcome back. This is Kyle Bazzi co-hosting with Dennis Dick this morning. We are bringing in a special guest, Christian Tharp. Good morning, Christian.
Good morning, Kyle.
I very excited to have you on, buddy. Christmas Eve, short trading day here, and we want to get started here. You are one of the coaches on MarketFi, the education platform with Benzinga. So let's get started by let's talk about what is your approach to trading and what are you coaching over there on MarketFi?
Sure. Yeah, great question. And it's believe it or not, that is something I always like to put on the table first because I tend to try to do things maybe a little bit different than the mainstream when it comes to coaching. Yeah. So, and I think that's why there's been a lot of gravitation to my approach, which is very much kind of getting back to the basics, getting back to the core fundamentals of trading. And a lot of that has to do with simple price action, has to do with protective stop measures, being your best analyst, looking at what prices tell us. And that's kind of where my niche has been made. I always encourage everyone that I work with from the very beginning to remember investors and traders were doing just fine, before software programs, trading platforms, and newsletters. And so there's a lot to be said with what we see in price. So my philosophy is to not only educate on that, but also educate on finding, the stocks and or the markets or the industries that'll speak a little louder than others.
So jump into some of these details. How do you, approach, your trading setups? Or are you looking for specific setups and then like trying to trade from those, or how do you approach it?
Absolutely. Everything for me is finding a stock that does provide that type of setup. There are some stocks that speak louder than others and make it a little bit more clear that, hey, look, if I do this, I should go higher. So, for example, a stock that was on a lot of our radars here recently was DHI, Delta Henry Ivory, which is DR Horton.
Yep.
To me, this is about as simple as it gets. If you want kind of textbook, what I've tried to relay is DHI had obviously been resisting $20, here for quite some time.
Right.
And anybody with any amount of experience could look at that and tell you the same thing. Unfortunately, a lot of times we're not looking for these things. Brokerage commercials and software trading infomercials, these things kind of lead us to believe we have to make it a little bit more complicated, which isn't to say that those things don't have a time and place. I mean, do not get me wrong, being a CMT, and I can talk your head off about some of that stuff. However, when you look at DHI, it broke through 20. I'd expect it to go higher. We jumped in. Hey, we're up close to 6% already, 2-3 days later. That's the type of thing. Now, not necessarily, and by the way, I don't mean something just channeling sideways. Other things, stocks may not be quite that simple, but it can be. ISIS, we were talking about, before I came on here, ISIS, which is Ivory Sierra. I think anybody could look at that stock and say, well, that stock seems to be resisting $40 here the past several months.
Yeah.
If we break through it, probably got a pretty good trade. Well,
yeah.
So far, so good.
Just your classic breakout trade there. You're exactly right. You look back into September, you got up to 39.83, failed, sold off. Tried in early November, quick fail. Third time December trying. Now fourth time. Eventually, if you keep banging your head against the roof long enough, eventually you're going to break through it here, and that's kind of like what it just did there. So you got like filters that you're searching through. Like, how do you find these setups? Like, are you just looking through tons of charts here manually, or you got like computer system looking for this? How do you find these setups?
Well, believe it or not, it's manual. Students are surprised when I work with them, but I always kind of mention I like to use the example of going into the batting cages. Okay,
Yep.
Now I've played ball all my life, and I'd like to believe I can hit a ball, but when I first go into the batting cage, the 70-mile-an-hour cage, I can't catch up to the speed of the pitch right off the bat because I've played so much softball. But if I keep kind of watching the pitches, eventually I catch up to the speed of the pitch. And I always say it's the same thing with chart analysis here. Once you train your eyes to kind of catch up to what you're seeing, sometimes first we have to be looking for, but then next we have to be able to recognize some things are very simple like that. And I could ramble off 10 more that are like this. How I find these is I go straight to that source. In other words, I could not tell you if ISIS is a good company or not, what the industry is or is not doing, whether it's hot or not, what any analysts have to say about it, not relevant to me. What's relevant to me is I found a chart when I was flipping through them that showed a clear breakout point of 40 if it should happen.
Yep.
So that allows me to very quickly, so I can be here talking to you, and I can flip through 15 charts and talk at the same time because my eyes are doing the work.
Right.
So
This is just
although it
trained
seems
eyes.
strange, yeah. So when it seems strange to some of the people I work with, like, well, gosh, how many charts do you have to look at? I'm like, well, believe it or not, I probably have to look at, on average, 10 to 15 to find one that I really like. But then again, it only takes me about 30 seconds to look through those 10 or 15. And I try to coach and educate my students to do the same thing. And believe it or not, most of them take to it pretty quickly.
Now, Christian, are you looking for stocks that have, is there any filters on market cap or especially volume?
Yes. There's a few key issues there. First, when it comes to the price and volume, I do tend to try to look at a sweet spot, kind of in that $10 to $50 area. The $500,000 to $10 million in volume, average volume, 90-day. We are looking for generally that small to mid cap. These are stocks that are going to give us that right combination of risk reward. I also look for, on one hand, if ISIS here had no volume when it broke out, doesn't necessarily mean it won't go higher, but it certainly doesn't hurt the fact that it had, double the volume when it broke out. That's a positive sign. As I always like to say, volume adds validity, right?
Yeah, the volume would be a red flag for you. If it wasn't breaking out on large volume, you might have a little concern with that.
Exactly. If I always tell everybody, look, ISIS traded almost 3 million shares the day it broke out. That's a stock that averages 1.2. So that's not, me and Kyle saying, hey, man, what do you think about buying some ISIS today? That is money moving and pushing that stock higher. So if it means something, when we break through, then it should mean something to hold and to go higher. So I do like to see that if given a choice. If I saw two stocks side by side, one broke out on less than average volume, one broke out on, say, like ISIS here, then, of course, I'd probably gravitate to the ISIS.
Gotcha. Now, what other stocks are on your radar here? Because you've given us two here, and I like this, because you're saving me the work of looking through all these charts.
Sure. No, I love it. I love, the kind of looking at stocks and kind of showing these people. INCY, INCY.
Okay.
For listeners, Ivory, November, Charlie, Yankee. Love this one. Okay, this one I like. $50 had been something that the stock had resisted a couple times here over the last month.
Yep.
Okay, and this is a stock that also pushed up through that 50. Technically, it kind of pushed up above that 50, I think, on Thursday, but it really got a nice move volume-wise on Friday, where the stock pushed on about 4.5 or so million shares, almost 3 times its average.
Whoa.
So really kind of confirmed that push through 50.
So
now
it sold back down and then ripped back. Okay, so right back up right on Monday. So you were you buying at that 50 level then, Christian?
Yes, when it pushed above 50, okay, and I saw it getting ready to hold. Like I was fortunate to get in, because I like to see that hold. Not the intraday move, but that kind of hold, that close. And so I realized that some people are not fortunate to sit there and watch the last half hour of the day, but it became clear to me that INCY was going to hold. And so when it held, that's how I was able to get in. Now, for those that can't, I tend to encourage a wait for a pullback. So, for example, if somebody looked at, you could say the same with DHI, we mentioned PHM, but say, for example, FLTX, Frank Lima Tango X-ray. Now, this one has a little bit different of a look, but this is why I always use that generic phrase. I don't like to use support and resistance as much as I like to say key levels. So if you look at Fleetmatics here, the level of 40 was important to this stock. Mm-hmm. It has been since July. Resistance, then support, then resistance again in September, resistance again underneath it. Well, we pushed up through it, a little bit of an increase in volume, and what I said yesterday in my morning market cast call was that, hey, if this stock tests 40 as a support, okay, we're going to expect that to now start acting as a support again now that we're above it, right? So traders that had missed it on that nice little move, the problem is, look, 41, 41.5, 42 isn't really my price. 40 was. Yesterday, stock came down, hit 40. Exactly. I think the low of the day was something like 39.80 or something. You buy it at 40, and by the end of the day, I've got three 5-star students that are up 5% in this stock in a day.
Nice.
So stuff like that. So that's kind of how I look to trade it.
Question: how do you control the risk? Because sometimes you'll get these breakouts that are actually fake outs, I call them, and then they all of a sudden obviously don't. So, okay, this stock broke through 40 and it's a classic setup, and it didn't give you any heat. this stock goes down to like 39, 38 or something, or would you let it get that far out of your, or are you looking like if it takes out the old level there that maybe you're going to cut the loss, or how do you control the risk?
Exactly, exactly. That's textbook. That's textbook what I coach. That, we're looking at stocks and we're putting probabilities. Probabilities say we broke through resistance, we should go higher. Probabilities say that level should now act as support if we come down to it. However, as I always like to say, the market reserves the right to change its mind, right?
Yeah.
So we want to protect ourselves. My expectation of this stock would be that if I'm right, it should run to the next level of 45 on the way up. All right. If I'm wrong, I'm going to set a protective stop underneath me in case it fakes me out. Now, one of the ways that I personally, I know some people don't like to wait and don't like to miss the boat, but I'm a huge fan of waiting for the close. That increases the probabilities that it was a legitimate breakout. In other words, if I look back in November, twice this stock peaked its head above 40. If I tried to jump in on that intraday break, obviously the trade's not working out. Notice the difference here if I wait for the close. The stock did actually close. Not only did it close above 40, it closed around 42.
Yeah.
Okay. Volume was good. I wouldn't say fantastic, but it was good. It was an increase. So that adds a little bit of, believe it or not, reducing risk, because this should be a higher probability trade than, say, if I did an intraday move. But again, coming to 40, we throw in a protective stop. We put ourselves in a good risk-reward scenario.
Where would you put the protective stop, just on this one, for example? Like how low?
Depending on the individual trader and what their, the kind of maintenance that they would have in the trade, somewhere in that general 2 to 3% below the 40.
Gotcha.
Is
So
where
you're
I want
looking
it
to
to
come in, pick a 5-7% move up, and lose maybe 2 to 3% on your losers, right?
Well, I'm looking for more of something in the 10 to 12%. I'm looking for this run
bigger.
to 45.
Yeah.
Now, a day trader, I coach people that want to be day traders. They could have easily closed this thing out yesterday for 5% and called it a wrap, and the stop loss would have been a little bit different for them.
Right.
But my bread and butter and what I encourage is more of a swing trade. So what we'd like to do is get this run. If you look back in August, we popped through 40, came down, bounced on it, went to 45, and then higher. This stock was gravitating here over the last couple months right around the 35, 36 area. So all probability say if we're right about this swing trade, we should at least make it to 45. So we're in a scenario where we're risking something around 1 to make 5 or 6.
Gotcha.
Okay, and you just don't have to be right very often if you put yourself in those scenarios.
The risk-return ratio. That's
1,
another
5, 6.
pro tip right there.
How long would you hold, Christian, to wait for that on a swing trade?
I would say a good stock keeps you in it. So if I'm right about this, I would say a couple days, couple weeks should get us there. I encourage kind of analyzing the whole chart. So when you look at, say, for example, if we stick with Fleetmatics, how long does it normally take for it to swing from here to there? How long does it take to swing from here to there when it's the run I'm looking for? So, for example, in August, it took about 1.5 trading weeks to get from 40 to 45, right? If I look in November, when it came down to 35, it took about maybe a little over 1 trading week to get back to 40. Mm-hmm. So if I would, if I'm anybody in this trade right now, I would say, well, you probably expect a trading week to 2 to get there.
Right.
But this nice move to 42 is a good start.
When you're in these swing trades, and obviously, it's one thing to be a day trader, you don't get impacted by news very much, but when you're in trades for a week and a half or 2 weeks, obviously individual company-specific news could come out and ding you. How do you handle that? Have you been in situations where that happens, and what do you do in that situation?
Absolutely, absolutely. Great question, and it's a very common question, especially from retail traders still kind of learning the ropes, because typically we tend to put a lot of emphasis on these bad happenings. So part of it I say, well, what are the odds of it happening as a general norm? In other words, I cannot count the number of times somebody has said, but Christian, what about something like the flash crash? And my response is always, you mean that thing that happened one time in the, in the last, we're not going to build a trading approach around something that happened that one time. We're going to build a trading approach around what happens the rest of the time, So same thing. One of the things we can do is make sure before we ever get into any stock that we're not getting into it before an earnings release is coming out. So that's something we can avoid. This stock, for example, doesn't have earnings until mid to late February, so we're good. Now, as far as the surprise news, exactly. As far as the surprise news, I always say, well, let's put it this way. There's a yin and a yang, all right? Yes, it is frustrating for me, just like anyone, where I wake up one day and Credit Suisse downgraded a stock I was in, and it tanks 8%. On the flip side, I have never offered to give back the profit when UBS upgraded a stock I was in, so I call that a wash.
Yeah.
Christian, are you ever using? Are you just buying the stocks, or are you shorting and or using options?
Yes, I do both. I tend to stick with stocks in my coaching, only because I'm a huge fan of limiting risk, and I know that options are very, very complex as far as limiting versus increasing risk. But for what I coach, a lot of times when people are learning the ropes, they're putting themselves in much, much higher risk scenarios. Me personally, yes, I definitely short stocks. Options can be very, very profitable if you know how to use them. But from a coaching standpoint, I always try to make sure that the students I work with don't hurt themselves trading stocks before they start getting into options, where they can find themselves losing, obviously 50 to 100% of their money in that position.
Got you. So it's about the risk then.
Yes. Now, for me, obviously, I started as an options trader, so I think they can be very, very well. There's obviously a lot of options traders who do very, very well. From a coaching standpoint, what happens is a lot of times we don't have the basic fundamentals down, and then we kind of shift in options, which sound great on the surface, but we put ourselves in a position where the bottom line is this: if you are letting your losses run on you, say in stock trading, that's not going to have near the detrimental effect that it would in an options trade. So that's why in my coaching I tend to say, well, let's focus on stocks first, because I'd rather you not hurt yourself and wake up down 75% the very next morning because you broke a rule.
How?
Yeah, that wouldn't be good. Now, I'm looking here. You're the editor, and you've got this Today's Big Stock newsletter. So I want to know, what is Today's Big Stock?
Sure. Today's Big Stock, very similar to the 5-Star Stock Watch series that I write, where what I am doing, everything we've talked about in this interview today, is what I'm doing for anyone that wants to read it right there. I mean, I go out and I find stocks. People ask me all the time, well, Christian, you don't pay attention to the fundamentals, but on Today's Big Stock, you have all this about the company. And I say, well, yeah, that's a whole lot of cut and pasting, to be honest with you. I don't actually, it doesn't matter to me one way or another. What I'm trying to find is a chart where I have sifted through, because it's easy for me to show these to someone and for them to say, well, gosh, Christian, yeah, I could make those trading decisions too if I had stocks like that. Exactly. That's what I'm doing. I'm going and finding stocks like that speak to me. I can trade based on price solely because I'm selecting stocks where price tell me where to trade. So with Today's Big Stock, that's what I'm doing. I'm finding a stock where I flipped through 5, 10, 15 stocks, 20 stocks, and I found, this one here that looked fantastic to me. ISIS I just wrote about recently. So anyone that read that article, they kind of had a stock they could have thrown on their watch list, and I'm saying, hey, if this stock breaks through 40, it could be a great trade for you. So I'm doing exactly in that article what we've talked about today.
What else you got besides ISIS? I know you were looking at some of the home builders like Toll and KBH.
Oh, yeah, the home builders. And this was interesting, Kyle, because we had talked about this beforehand, and this is just textbook because I think you were talking about the fundamental news didn't seem to jive with what the stocks were doing.
Mm-hmm.
Right.
And that's why probably if I had to consolidate everything I teach and coach and educate is to kind of ignore what we may be reading and go find the answers ourselves. So, for example, DHI we've mentioned, check out Toll Brothers, TOL, Tango Oscar Lima. Okay, this is something that we've had on our radar for quite some time because if you look over the last 6 months, $35 has been a very, very strong resistance for that stock. All right, so if we break through it, we'd expect to go higher. Well, yesterday, in reality, we probably did it on Friday, but we kind of held that. If somebody was watching Friday at the end of the day and we saw that we held 35 for the first time in 6-7 months, okay, check out the payday you're getting yesterday when we really popped through, okay, on almost double the volume, 6 million shares on a stock that trades about 3.5. Okay, I mean, huge jump. And notice Lennar Brothers, Lennar Brothers, Lennar, LEN, did the same thing. Lima Echo November.
Now, Christian, I still have the Toll Brothers chart up. That 35 is a major resistance. I mean, it kissed it 1, 2, 3 times in the last 6 months. What you said you're looking at it holding over 35. How long are you looking for it to hold over 35? You're looking for a close over 35?
Exactly. All I'm looking for is a nice, good, solid close. So notice how all those times it touched that 35, it could not close above it. Now, this stock has respected that 35 exceptionally well. I mean, if you look back, the furthest it ever went above it was back in July, where it got to like 35 and a quarter or something.
Right.
Okay, so this stock says, look, I am not going above that. Well, when you pop through it and you can actually close, you can hold. In other words, you know, it wasn't pushed back down by the end of the day. I look for that close. The question when it comes to the execution of the trade is, where is it closing at the time? In other words, FLTX, by the time I knew it was closing above 40, well, now it's at 42.
Yeah.
Okay, so that's not really my 40. However, if I'm watching Toll Brothers here, closing just above 35, 35.10, 35.15, if you're watching, this is already in your watch list, right? You've been monitoring it for some time. It's going to close. It's going to close. You could have made this trade on Friday, and you get the payday yesterday when the stock takes off almost $2.
I got AMZN up right now, so I'm looking at this hit. It kissed 38 almost 4 times. Set in the last 6 months.
And notice, Kyle, the stocks that we're putting up are so abundantly clear what it was I liked about them.
Yeah.
Okay. I mean, I'm not having to say a word, and you're saying 35 on Toll. You're saying 38. Yeah.
Jumps out at you.
Yeah, and that's what I try to encourage, because notice how not once have we mentioned candlestick patterns, Fibonacci retracements, Elliott wave, MACD, stochastics. We haven't mentioned anything. Okay,
I like
so
this
is why everybody kind of gravitates, because especially for the retail trader, they're kind of been made to feel like, well, gosh, black boxes, algorithms, oh my goodness, high frequency trading, I can't win. Yeah, you can. Okay, yeah, you can. Just you need to find the stocks that give you the edge. And that's what I try to find and kind of show to the people I work with. You know,
like
38 on Lennar. I mean, I think we, assuming, again, the market doesn't, take that liberty to change its mind. I love the idea of this thing hopefully challenging the 43, 44 area in the future.
I mean, everything you say, Christian, like, I've been a prop trader for 15 years, and this is the exact stuff that I've learned over my 15-year trading career. This is excellent stuff here you're telling our listeners here today, with the setups, with, obviously, controlling the risk, with looking at what levels jump out at you here. So I couldn't agree more with everything that you're saying. It's just been a great interview, Christian. So do you have anything closing for our listeners here, like little tips for the day or tips?
Oh, sure. Absolutely. First, I appreciate you guys having me on. I always love, as you can see, I'm very passionate about what I kind of teach and how I trade. But I'll leave everybody, Dennis Gartman, I don't know how many people are familiar with him. Most that are in the market are probably familiar with him. 2 things I've heard him say, one of which is a part of his trading rules that I think they're perfect. One of which, I heard him in an interview once where he was being asked about his overall thought of where the market was going. And there was all the, a little bit more complexity in the question. And he kind of chuckled and he laughed and said, I've been in the market for X amount of decades. And one thing I've learned, and I've learned it well, is the simpler I've learned to keep it, the better I've done. And I noticed that in his trading rules, something he put that went along with that was complexity tends to create confusion. And then he goes on to say, when I keep it simple, I tend to do better. So I would leave everyone with just, those of you that are struggling in the markets, maybe try to break it down to the fundamentals and see how you do.
KISS.
The KISS method.
KISS.
Yep.
Keep it
KISS
simple,
method.
Stupid.
Well, yeah, exactly. Keep it simple, stupid. Although I did have a student correct me once and say, well, you shouldn't call people stupid. I keep it simple, sunshine. And so I had to apologize for the next 20 minutes. I had to keep apologizing. I wasn't calling you stupid, but yes, exactly. The KISS approach, exactly.
Well, cool. Well, Christian, it was an absolute pleasure having you on this morning, and I'm sure we will have you on again soon. Happy holidays, man. Enjoy the short trading day and the day off tomorrow.
Thanks, guys. Have a great one. Have a great holiday.
Thanks, Christian.